We have seen that the short and long term have dipped quite a bit. They were both way up above the zero axis line. So this means that we're in kind of a scary spot because both short and long term traders are well above water in a normally zero sum game. And what do you know? This was right at the local top and the all time high. And then we start to dip dramatically.
Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me is Brian from Santiment, and we are going to do a deep dive into the crypto metrics because we're seeing a lot of volatility, and I think it's a good time, Brian, to just get into the nitty-gritty to get an idea what the hell is happening here.
Yeah, so we've had a little over an 11% drop now from the all-time high from a little over a week ago, and obviously the conversation has shifted into buy the dip mode after last time we talked. We were in celebration mode and everyone was just speculating on how high we would go. So we're in a bit of a different phase now, and we can jump into some metrics to see where people's heads are at, what's going on chain, and a few other random metrics we can dive into.
Yeah, let's start with Bitcoin because that's taking a lot of people are focused on Bitcoin right now because it's taking a bit of a beating, after hitting 124K. And then, what we saw is that some whales were dumping just recently, over 24,000 Bitcoin was dumped.
Yeah, and we'll get to the whales. It's always interesting when you see these viral posts about a big whale selling a bunch of coins, which are accurate, but oftentimes they're just moving coins to another wallet or sending things into some sort of institutional wallet that we don't know about. So much is always a mystery. So we like to look at the collective amount, which we'll do in a second, held by whales. For starters, just looking at the overall market cap, we're seeing a little over a 5% drop just in the past week across all market caps. Meanwhile, look at volume, up almost 31% this week compared to a week ago. So clearly it's a polarizing time. Lots of people either, finding this to be an opportunity or they're panic selling. It's always so fascinating when you see this kind of volatility to see just how much higher volume can go once you start seeing prices chopping up and down and people salivating over their target prices in either direction.
Yeah, it's and from a sentiment standpoint, is it negative out there? Are you seeing a lot of negative talk?
Yeah, so it's fluctuated a bit. People were optimistic a little early on in the dip. And now I've seen it kind of drop into a little bit of a dubious feeling across the crowd. Not like, terrified, but there's definitely some feelings of, oh crap, maybe the top was in, I should sell while I can. You can see the moments when you get big tops like this. It often foreshadows a top, sometimes a little bit delayed. Sometimes it's after the all-time high like we saw here. People get optimistic after this initial dip and think that 115K is the target price, and they're mistaken. It ends up going lower until they get sort of very doom and gloom. Then you get a little bounce and finally a drop like we're seeing now. It was at around 108, 109, now back right around 110.1. And sentiment's probably a little below average if we take just the past 3 months, just eyeballing. This is kind of the bullish line versus bearish line down here. And we've definitely been under it for about a week now, with some of the most negative moments being on the 19th and the 24th. I would expect that the sentiment continues to go down. If prices continue to droop toward 100K again, that would be a big tester for a lot of retail traders out there.
Brian, it's funny because our last episode, we were highlighting some potential warning signs, nothing to call home about. And I remember seeing people in the comments saying, you guys don't know what you're talking about. It's bullish. And then lo and behold, here we are.
Yeah, not a lot of reward for being correct, but plenty of vocal people when we hint at something that might come and then it doesn't happen. But, we're used to it here. I think this is exactly why we don't give investment advice. We simply go with what the metrics are likely projecting, and there's no horoscope, there's no crystal ball that says if you see this, it's automatically going to do that with the price. Oftentimes it's a self-fulfilling prophecy. All we can do is see that the likely outcome is one way. And, when things get negative, oftentimes it leads to a bounce. When things get super positive and retail is celebrating, that's when they typically get punished. So this is only one of many metrics, but it is one of my favorites for sure.
Yeah, absolutely. Now, what are you seeing from a MVRV standpoint? Because that may be in line with this sentiment shift.
Yeah, so on the MVRV side, we have seen that the short and long term have dipped quite a bit. They were both way up above the zero axis line. So this means that we're in kind of a scary spot because both short and long term traders are well above water in a normally zero sum game. And what do you know? This was right at the local top and the all-time high, and then we start to dip dramatically due to all of the profits that were coming in, just like we saw back here a month before that on July 13th. We immediately started to retrace. So here we are now. Short-term traders are at negative 5.1%, indicating there's actually the biggest short-term opportunity that we've seen since mid-June. That's a pretty big deal. A little over 2 months ago was the last time. And that ended up being a great entry point with prices getting below 100K for the first time in a while. And we bounced all the way up to a few different all-time highs over the next few weeks. So short term's looking good. Long term, we'd still like to see it dip a little closer to zero, but it's pretty reasonable now at just plus 11%.
See, this is very insightful. And it goes back to what I mentioned earlier, that we were flagging this 2 weeks ago. People were still feeling bullish. Like, how can it go down? We just hit 124K. But like you said, this data is really revealing, and it's forward looking as well. While it may not happen instantaneously as we're looking at it, and there's a lag, it played out according to the thesis and the signs, the warning signs that were there.
It's all probabilities. Nothing's a certainty, but when you see things way up high, in terms of average trading returns, it's never a bad idea to de-risk a little bit and wait for some better moments.
So on that note, what are the whales doing? Are they continuing to accumulate?
So on the whale side, I still say things look pretty fine. This is the 6-month trend here. They've added during this long-term period about 195,000 more Bitcoin. When we're accounting for 10 to 10,000 BTC wallets, which own just about 2/3 of the entire supply. A little bit of a drop in the past 24 hours, but I wouldn't call this much. If we just look recently, the all-time high was around August 12th or 13th, depending on your time zone. We can just go from here and see that they've accumulated a little over 22,000 more Bitcoin since prices have dropped. So we've talked about bullish divergences, Tony. If we just draw, if I could draw a little better than that, we just draw a simple line from the all-time high day here. That's the whales going up. And then this is the price in these dark green bars. That's called a bullish divergence in terms of whale accumulation. They're adding more as prices are dropping, which is exactly what you want to see if you're hoping and expecting for a rebound of some sort. So this is a promising sign, considering how much weight these sharks and whales tend to hold in terms of future price movement.
Yeah, absolutely. And while this is happening, maybe I don't know if you want to call it the macro, looking at this from a yearly standpoint, the trend is still up. The majority of whales are still holding.
Exactly. Yeah. I mean, zooming out to a year instead of that 3-month stretch. Just take it from September 21st. If I hold down shift here and drag my mouse right, they've accumulated almost 518,000 Bitcoin during that time, just an enormous amount of the 18 million plus available supply. That's, call it maybe 1/30th of the entire supply over these 11 months or so. Crazy.
Wow. Now, on the other side of the coin, you got ETF inflows and outflows. What are you seeing on that front?
Looking at ETFs, things look a little bit concerning. So I've gone back and forth on this one being like a a great alpha signal. I've almost kind of leaned a little bit toward this being a bit of a counter signal, and some people have pointed that out when we've posted about ETFs. And we're always learning and trying to find better ways to interpret this data. But I mean, if you just look at the biggest peaks, Tony, over the past year or so, a lot of them coincided with tops, like the highest amount. I mean, I guess this one doesn't count because it kept going up, but like that's a perfect top when inflows were at their highest. Same here in mid-July, and we just got lower and lower ever since. Yeah, we did make one more all-time high a couple weeks ago, but I'm starting to get on board with the theory that there's some retail money that's going into these ETFs, and it's more of like an emotional sentiment type of chart that's just represented by real money moving in and out. So it's like, obviously institutionals early on in ETFs existence, they were dominating a high percentage of the amount of inflows and outflows. But as it's become more accessible on more brokerages over the past, almost 2 years or so now that they've existed, I think that retail is making up a large part of these inflows and outflows. And you're welcome to disagree. There probably are some data points out there that can fact check that more. But based on some of these big outflow spikes, you can see how they've kind of coincided with bottoms. As you see that green price move, as I move my cursor back and forth here, and even here, we've seen 6 days in a row of outflows now. And yes, price moved down into it, but as it kind of peaked here, there's an argument that it can start to move back up now.
Yeah, absolutely. And it's really a mixed bag, to your point, right? Of retail. Like I can go in Robinhood and buy iBit. Right? And if a big segment of that is retail, in addition, you got the institutional, retail is going to go in and out. ETFs are living, breathing entities, financial instruments that people go in and out of. Honestly, it's while you can't do it on weekends, you can certainly do it as much as you want during the weekday.
Yeah, totally. And if you've got 1,000 retailers that are flowing money out, they can completely overwhelm the 3 to 5 institutional, huge corporations that might be inflowing at the same time. Retailers carry a lot of weight, especially in numbers. So obviously with Bitcoin on chain, we don't know anything. We could definitely find out more data, but it's not like brokerages are going to reveal people's private information and whether they qualify as a retailer or a institutional type of trader. I just, from what I've seen now, having enough data over the past year, these outflow spikes are often kind of just a sign of fear. And we know from many of our reviews and videos we've done, fear spikes often end up leading to bottoms.
Yeah, absolutely. But, it's all playing out according to the thesis that we've highlighted, that the market does the opposite of the herd.
Yep.
And, you got to watch for these whales, and the whales are doing the opposite of the herd, of course, the retail herd. So
yeah.
Funny how the data just shows exactly what we've been talking about. And
that's assuming that this is representing the herd a little more than institutionals these days. It wasn't always that way, but I think there's a debate for it, and maybe the commenters watching this video on both our channels can weigh in on it.
Yeah. And look, and you also you're going to have, because it's such a mixed bag holding the ETF, you got pensions, endowments, on multi-level, it goes back to, there's going to be people taking profits because not everybody operates at the same mindset or have the same view of the market, right? Some may be like, hey, we're up, let's exit, and then we'll buy back in when it's lower.
Yep.
Think things like that.
Great point.
Cool. So how about we look at some altcoins, and maybe we can look at ETH, because that's been ripping, obviously cooling down now, but it was getting a ton of liquidity. Almost, I think I saw some people say that people were moving funds from Bitcoin, like liquidating Bitcoin to move funds to ETH.
Yeah, I could see that being the case, and I've seen those posts as well. Ethereum's holding up pretty well. With Bitcoin retracing 11%, you'd normally see, a 15% plus drop from Ethereum. And from their all-time high here that they just scraped, what was it, about a day and a half ago. They've only dropped about 6%. So there's actually in my opinion, a sign that Ethereum is the better bet in this cycle compared to Bitcoin, considering it's retracing less.
Yeah, it's starting to outperform Bitcoin. And it's what we've seen historically. Bitcoin lead the market, rotation liquidity, ETH outperforms Bitcoin. Then you have some other altcoins that outperform Ethereum as you get more riskier, of course, down the list.
Yeah, I mean, looking at the past 10 weeks, it's still up about 107% price wise. And sentiment here, drawing a rough eyeballed line, if you call that around the midpoint, we've consistently been below in kind of a negative sentiment territory. I could even be a bit more generous and say that's the midway point. And we're still looking at going on 17 days now where we're seeing under average levels of positive sentiment.
Very interesting. What's the MVRV look like?
Yeah, MVRV is still a little scary. That makes sense considering, the 107% run over the past 10 weeks. But short term, it's pretty much back to even, only at about plus 3%. That's a decent sign if you're hoping for a little bit of a short term bounce. But long term, if you're planning to hold for a long time, this says with an average of about 45.5% profit from while it's active in the past year, this says that you'd be entering at a pretty high risk with hopes that those plus 45% on average would continue up toward plus 60, plus 70%. It can happen, but you'd much rather, be entering when the average traders you're competing with are already in negative territory, like back here. Obviously, you don't see opportunities like this happen every day, maybe even once a year. But this says that you need to be a little cautious. Doesn't mean it's not a good buy. It could even be a good buy right now. But considering how high above zero it is for the long term, just be careful, and you may be better off for a short term play if you're trying to play the math right.
Yeah, that definitely makes sense. And I wonder, as ETH is cooling down a bit here, if the liquidity, as we mentioned, went from Bitcoin to ETH, that liquidity starts going to some of the, altcoin number 500 or something like that. You start seeing some of those waking up.
Totally. I mean, that's kind of the cycle. Bitcoin goes to Ethereum, and some of the top caps like XRP, Chainlink's been getting a lot of great growth. And then eventually it goes to the more speculative assets and the meme coins. And then when, your average retailers don't even care about Bitcoin or Ethereum or XRP, and they're just going into meme coins, that tends to signal the end of the cycle and a bit of a crash for crypto.
You mentioned XRP. How about we jump to that, from a sentiment standpoint and MVRV?
XRP has been a bit unassuming lately, probably underperforming most of the other top caps. And the MVRV kind of reflects that. So average wallet returns that have been active in the past 30 days are way down at negative 7.2%. So if you're looking for a short-term play, the math says that XRP could actually be a decent swing trade for a few days, for a week. Assuming Bitcoin makes a bit of a bounce, you might see XRP make a bit of a greater bounce until this starts to get close or above zero again. Meanwhile, long-term still up at about plus 27%, mostly due to the effects of this huge run-up between late June and mid-July. So there was such a huge surge that you're still seeing long-term traders well in profit despite this retrace over the past month. So short-term wise, there's an opportunity. Long-term, be a little careful.
Yeah, that makes sense. And, while some people may be panicking and thinking, oh my God, what's going on with the market? We were supposed to pump, Jerome Powell just came out last week, but this data is really telling us the true story. But this is bullish because if it's getting below those respective overheated zones and even the neutral zones, it means a reversal is coming sooner than later.
Exactly. Yeah. I mean, buy the rumor, sell the news is really the name of the game. So even with good news or like increased optimism over Fed interest rate cuts, that's only going to do so much. It's basically just a small band-aid on a bullet wound. If you're worried about a bear cycle, even an interest rate cut is not going to just permanently fix or prevent a bear cycle from happening. It doesn't mean it's going to happen in the next few months or even the next year or two, but there's always going to be a bull cycle and a bear cycle in crypto. And you should honestly be more worried if the entire crowd thinks that an interest rate change, whether it's a hike or a cut, is going to just change everything, because that means that they're just artificially stimulating the markets rather than letting it do its own thing. So we'll see how that goes. And frankly, on the interest rate end, if we keep seeing stock markets make new highs and surge the way they have been, I know they've cooled off a little in the last week. That could tie Powell's hands, and he'd be like, I can't find a way to cut interest rates when we keep seeing the economy make new all-time high, or the stock market make new all-time highs.
Yeah, that's a great point. There's so much of the macro tied into markets and so many things to consider. So that certainly makes sense. How about Solana? What are you seeing on that front?
Yeah, so Solana, we're going to switch to Santiment because we don't have MVRV for it yet. Soon we will, though, because we're getting Solana's on-chain activity really ramped up lately, a lot on Santiment. So we're going to cut out these anomalies and just look since the bot sentiment stuff kind of came down to earth. And you can see here, we're actually at one of the most euphoric moments for Solana since this spike on June 20th. So a little over a 2-month high today in terms of bullish versus bearish ratio, with almost 5-to-1 bullish comments for every one bearish comment. And that tells me we need to be a little cautious again. It doesn't mean Solana is not a great investment for the long term, but if you're swing trading especially, and you see a bunch of euphoria all of a sudden just because of this mild bounce, be a little weary. I can tell that there's a lot of people salivating over Solana making it back to 200. Maybe there's plans for a lot of people to take profit. And if there's a whole bunch of people expecting to take profit at 200, usually that doesn't happen. You need to be targeting prices that aren't already being targeted by every Joe Schmo out there.
Yeah, and there was some very big news about Solana. I think it was yesterday. It was announced that 3 major hedge funds, Galaxy, Multicoin, they were going to raise $1 billion to invest in a Solana treasury company, a publicly traded company. We don't know what the name of the company is, but Solana, is of course mentioned. So I think that might be driving some of the sentiment.
Buy the rumor, sell the news. It's just a rumor now. Be careful about anything that may delay that. I don't know enough about the issues, or not issues, but the positive stories coming out. But oftentimes, just the initial announcement is enough to drive a rally. And then by the time it comes to fruition, it doesn't even matter. So you're probably seeing the reaction to that right now in real time. And it'll already be baked in by the time the, positive news ends up coming to be.
Yeah, well said. You mentioned Chainlink earlier. I'm a Chainlink token holder. It's been getting a lot of mentions, a lot of adoption, and I'm curious what you're seeing there from a sentiment standpoint.
Yeah, and we can look at the MVRV too. As far as sentiment, it was quite low for this little stretch here between the 17th and 25th. Finally got a little bit of an uptick today, but it's pretty neutral. I don't see people overextending or being overly fearful. Obviously, it had its big run up maybe 10-ish days ago where it jumped between the 16th and 22nd. Its price jumped about 28%. So I know a lot of Chainlink Marines out there were very pleased about that. But then, the FOMO itch started to come. Some of the late entries from retail came, and it's dropped a little over 12% since. So sentiment-wise, pretty normal. In terms of MVRV, yeah, it's coming back down to earth. Short-term wise, it was way up there at plus 29-ish, plus 30%. Now it's back to plus 5%. So still a bit overheated just from a math perspective. And the long term is still well overheated at plus 28%. You may want to consider waiting for prices to either go down a little more if you're looking for an ideal entry point, or you can take the risk and jump in now after we saw this 12.2% drop.
Very interesting. You could certainly use this data, MVRV, and the sentiment, and while no guarantees, there's no guarantees in the markets or anything, but it could really help you to navigate the markets. And you mentioned swing trading earlier. Grab some lows when everybody's down, and then wait for the rally, take some profits, or even just a long-term play when to grab the token when it's down.
Mm-hmm. Totally. I mean, there's just so many options on how you can play this, but having these metrics like MVRV and positive versus negative sentiment across social media, having these at your disposal just makes life a lot easier. So you're making more informed decisions.
Final item here before we wrap it up. What are you seeing on the stablecoin front as far as supply on exchanges and things like that?
Yeah, let's take a look specifically at Tether. We'll just look at the Ethereum blockchain for Tether for now. I'm just going to do a quick cursory scroll down to see if there are any major anomalies. I do see a lot of whale transactions going on. This purple line here shows that on the 21st, there was a little over 3,600 whale transactions that were over $1 million. That's a pretty big deal. And I won't correlate it with Bitcoin's price now, but I know that oftentimes that will mark a big shift in price behavior for the rest of the markets. So that's worth keeping an eye on to see if whale transactions stay high. You can see how much they've been up pretty much for the last 6-7 weeks now, especially these $1 million plus whales. In terms of supply and exchanges, just scrolling down. So the supply and exchanges, as a percent of the total supply, it's staying pretty neutral, just going up and down, fluctuating. Overall supply and exchanges, due to the minting and new Tether that's constantly being printed, it should constantly be going up. And for the most part, that trend, as we can see here, is looking pretty intact. So since July 3rd, there has been $2.8 billion more worth of Tether added to exchanges. So liquidity looks healthy.
Nice. Yeah. I think I mentioned this before, but I follow Whale Tracker on X, and you often get the updates about USDC that's minted, USDT that's minted. And I think to your point, like I saw over the past couple of weeks, like 2 billion minted. So
yeah,
seems
that seems reasonable. I'm just checking USDC to see if there's anything different or a separate story. Yeah, they're kind of in a completely different situation. Their supply and exchanges has dropped a lot since August 5th, $2.3 billion less. So it's kind of the opposite direction of Tether. Perhaps there's an explanation behind that. We did see over the past 24 hours, about $401.7 million was added back. So it's going up and down, but the trend does look like it's been going down away from exchanges for a while.
Yeah, that makes sense. Interesting. Obviously, I think the bulk or the majority comes from Tether as far as minting and the volume. And USDC doesn't have the same coverage globally as well. So probably more healthier to use USDT as the benchmark.
I would agree.
Good stuff, Brian. Well, I'm hoping in 2 weeks when we meet, the market has bottomed out, and using the data, people take their bets, not financial advice. But if things are heading down, I'm getting bullish, because I know, from a macro perspective, we're still in the bull market, and, we get below those respective levels as far as sentiment and MVRV, and then we bounce. I think you could see the next rally.
Yeah, I think a lot of people are hoping for it. I see that as a very valid argument right now. If the rate cuts don't come to fruition, like a lot of people are hoping, I could see that being a pretty big blow to a lot of people's, not just retails, but institutionals and whales optimism, and that could be bad. But we have to wait and see as we start to get close to the September FOMC meeting.
Absolutely. Brian, great stuff as usual. Thank you so much, and I'll see you in a couple of weeks.
Thanks, Tony. Always a pleasure.